if the token goes wrong, you'll have 1,000 "I hate you" comments, and you should go to death, and people will dox my address and send God knows what to my address. Or the token goes well, you'll be King Caesar, and people will like parade you, right? So there's really no in between.
Any like contractors, consultants who actually were helpful in this whole process?
There's no contractors or consultants that know anything about this process.
Okay, that's what I figured, but
because it changes every month. What worked last month doesn't work today. What works for me doesn't work for the next person, because like the markets change, right? When the market tanks 50%,
Yeah.
you're not getting the same deal you got 6 months ago.
Scale is the blockchain that is simply built different. Other L1 networks have costly transaction fees, clunky user experiences, and lack true adoption in AI and on-chain gaming. Explore the gas-free ecosystem at skale.space/ecosystem and follow their journey on X at Scale Network. That is Scale with a K. Hit the link in the show notes to get started. Hey everyone, Jason here. Wanted to talk about something that's been on my mind a lot recently. We should not be just recreating the TradFi industry. That's why I'm excited to share with you that today's sponsor, Magic Eden, is getting into token trading, and their vision is to become on-chain Binance and then much more as the entire world moves on-chain. Stay up to date with Magic Eden's journey by giving them a follow on X at Magic Eden. Are you a project founder that wants your team to be paid in stables, or even just give your team token grants? Both of these things can become complete nightmares. Toku simplifies every part of global token compensation, all in 100 countries on one platform. Reach out to their incredible team at toku.com or by hitting the link in the description of today's episode. Hey everyone, Jason here. There's a reason why Ledger is trusted to secure more than 20% of the world's crypto assets today. Check out their newest devices, the Ledger Stacks and the Ledger Flex, featuring the world's first secure touchscreens. Take your security seriously. Hit the link in the show notes of today's episode to check out their latest devices. Trust me, you won't regret it. All right, what's up, everybody? We got Rushi from Movement Labs. Big week for Rushi. What's up, fellas?
What's up, guys? I think we do.
Rushi, could you can we get the whole thing out of the way of the whole eyebrow situation going on X? Like, can you just turn around for everyone? How do we?
Yeah, give us the side-by-side look. Is this
the side-by-side look? We want to confirm it's a real Rushi on this pod. I don't know, man. I'm having doubts these days.
Yeah, no, I just gained weight. So like that picture that was from 2 years ago, I was in college and I was eating like dorm food. So naturally I was like nutrient deprived, and also like obviously wasn't launching a token. And then like obviously like 2 years later I'm gonna get fatter. I probably put on like 25 pounds. And then everyone's like, oh, it's not the real, like I can't believe, like it was pretty funny because it was mostly satire, but people like genuinely hit me up and they're just like, yo, did you get like something done? Like, are you okay? And like people were checking in on me, which is really sweet, but also like, guys, I didn't get like, it was 25 pounds. I guess it was like that much, but anyways.
25 pounds of muscle.
No, it's fat, bro. It's fat. It's fat. But I grew out the stash. I grew out the mullet. So yeah. I'm like, I'm transforming.
Why is the mullet so in with Gen Z these days, Rushi? Can you give us a little walkthrough of this?
It's like, I think it's like it starts with Australians. I think Australia was like the main mullet stash combo, and then like I actually don't know where it originated from. It just like it's a Williamsburg thing as well. Like I feel like a bunch of like the New Yorkers from Williamsburg all have like the mullet stash combos.
Well, I'm gonna call you Rushi Maverick now from going forward.
Rushi Maverick.
Wanted to have you guys on to talk about. There's a lot that obviously went on with Movement launching. Maybe we can take this opportunity. We'll do the regular roundup, but just get us up to speed on what's going on in Movement. I mean, that there was a big stuff happening this week.
Yeah, I mean, I can kick it off. Obviously, had a token launch, which was probably one of the most stressful times of my life. I think everything came kind of last minute, and honestly, did not expect what happened to happen. I think I'd be a fool to say like, oh, I was expecting it to all go happily and the reactions to occur. But I think like directionally, I can go into kind of token launch strategy and kind of what my philosophy was. But usually there's three main categories. You have the airdrop, you can't mess it up. You have like sentiment, which is public and private sentiment that you can't mess up. And then you just have like ecosystem and having that lined up day zero, which is like exchanges, market makers, protocols live day zero. So I think like most launches usually tend to mess up one or two of those. And I think like I mean we don't know how it plays out for the next few weeks. And I don't want to knock on wood, but I think we kind of nailed all three of those circuits, which I would say 70% luck and 30% skill. But
Hmm.
yeah,
So I mean, look, every the since Trump got elected, a lot of teams have now, and given where the market is, have thought about, hey, TG, let's go. I mean, the market seems to be very receptive. What's going through your mind? You mentioned it's probably one of the most stressful times. Like, walk us through maybe as much as you could into the inner psychology of like what happened there. What was the, you know, because a lot of people that might be listening here, including maybe you, Dino, as well, like are thinking about a TG or token launch. Just tell us more about that.
yeah. I mean, like directionally, anytime tokens go up, markets go up, it's a better time to launch tokens. There's more liquidity in the markets. Exchanges are more willing to open up the great gates. There's more buyers, generally participants. From a Trump point of view, I think regulatory environment improves a lot. Like even our general counsels were like, yeah, like the rules and figments that we were leading on for the last 6 months maybe don't apply today, and we're able to be more risk on. Obviously, like we still have the foundation structures, and most U.S. companies are still going to approach that. But I do think like it's pretty interesting. Like I'm hearing like incorporations like Wyoming happening. I think like there's a lot more. I mean, like Coinbase itself, right? There's like
Mhm.
listing a lot more like memes recently, and I actually am pretty bullish Coinbase as exchange leading up to this because there's a lot of organic volume, there's a lot of institutional volume. When you look at like even Sweet success, right? Like you had like the VanEck ETFs, and like
Yeah.
the ETPs, and a lot of these are custody through Coinbase custody,
Hmm.
or done through a Coinbase exchange. So we're seeing a lot of that with Trump coming to office and people buying more crypto, inevitably that capital is now coming through institutions that are like BlackRock's, the VanEck of the world, and they're going through U.S. based exchanges. So I mean, Yana talked about this like at Permissionless actually. I think that it's a great time to be an American crypto company.
Rushi, can you just take us way more behind the scenes? Like what actually was happening? Like how crazy is it to launch a token? You said it was one of the most stressful or toughest, I think, work experiences of your life. Like take us actually behind the scenes. Like what happens for you that we don't see as the public?
Where do I start? Let me start with the team, right? So like obviously when you're building together a team, everyone looks to the founders kind of as leadership, and kind of direction, right? So launching a token is a lot of variables, usually because you don't really know anything until oftentimes few hours before TGE, whether that's with exchanges, whether that's in market makers, whether that's in market conditions. There's a lot of variables. I think it's really different than like traditional stock companies. Like I feel like actually I've never IPO'd a company, but I feel like there's a lot more regulatory clarity there. Like you'll have your announcement and kind of lock in date months before, sometimes years before. I actually don't know what to talk about in terms of IPOs, but I feel like there's a lot more clarity in terms of regular stock companies. While crypto companies, like you can find out what exchange you're launching on right before TG and don't really have much clarity. So from like um, from our point of view, I think the team was it was scrambling for the last like 4 weeks because you're trying to line up all your financial capital, your market makers, and kind of that stuff. You're trying to rally out your ecosystem teams and get them on timelines. You have investors asking like when token, when token, when token. You have community members asking when token, when token. I think for like movement, like people didn't really know we were launching a token and until like right up to like 2 or 3 weeks before, when we dropped the tokenomics. I think we approach strategy a little bit differently, because we kind of have a different architecture and kind of general different principles. Um, but I think like going specifics, like the team morale was something that I didn't expect. Like obviously, like there's a lot of stress for the first last few weeks, so people were like working nonstop, pretty much the entire team, and there's a lot of burnout. I would say that I didn't expect to happen, which is pretty natural. Right? You go through a very stressful time, and it's a lot of inner conflict management, external conflict management. Um, Thankfully, like Cooper kind of did a really good job with that. He was my co-founder, but that's something I didn't expect. And then in terms of like kind of launch plans, like I would actually text Santi about this all the time, right? There's a lot of deals that go on in the background, and as a founder, it's very difficult to make decisions because you only get one shot at this, right? It's not like,
Mhm.
oh, you raise a Series A, you have like three different investors. You have like 5 weeks to decide, and you have like, oh, you can do another round if you mess up, right? If you mess up your token launch, your company's screwed. And that's kind of how it's always historically went. So when you have like the gun to your head, and fundamentally like, you're the face of the company, right? So if the token goes wrong, you'll have 1,000 "I hate you" comments, and you should go to death, and people will dox my address and send God knows what to my address. Or the token goes well, you'll be King Caesar, and people will like parade you, right? So there's really no in between.
Well, Rushi, I mean, I think on that point, like it's actually pretty difficult, and I sympathize with founders because if things go very well, I don't think you get nearly enough credit. It's sort of like obviously, like we expected this. You know, there's sort of this sentiment in the community where it's like if there's more downside because if things go south, like they only blame you and the
Yeah,
team. But if things go well, it's sort of like yeah, like obviously you like and they
yeah,
don't give you nearly enough credit and. I bet it's so stressful. I mean, I've had the privilege of just seeing the evolution of how much you've you know how much you've grown the ecosystem and it's been years and maybe just give us for the listeners that don't have that appreciation like this has been a this has been a long journey. I think of you as one of the founders that I've just the amount of hustle like constantly is just this is relentless. But like you get to a point of like TG and people just see that like tip of the iceberg kind of thing.
yeah.
But obviously timing is important. Obviously market conditions are important. But if you take a long-term view, like a lot of this has been cooking for years. So like from your standpoint, like just give listeners kind of more perspective on the whole evolution of what how you got you know, um, to mainnet and like TGE, I guess.
Yeah, I mean, so like we start like our origin story was kind of bad. We started like two, I think 2 years now ago. We were just two college kids, like literally the brokest kids possible. There's this funny story. Like Cooper sold his car, I think 2 months ago, 2 months into the company because we couldn't afford engineers.
I,
Um, and that's kind of the anecdote I say because it was literally trenches. We were in the dorm room as like our office. But yeah, I think like we were never gonna like I always say this, we're never gonna be the smartest technologists. We were never gonna be like the BlackRock ex BCG and ex McKinsey like fancy resume. But I think like what we always understood was community ecosystem because ultimately a chain is only successful or a platform is only successful if you have builders that are loyal to you. And I think I always point to Tolly in 21 to this where obviously Solana was doing really well, and then 22, 23 Sol crashed. But Tolly's relentlessness never changed. He was always in the trenches with builders. Like you saw him, like still talking about products, still talking with Jito, still talking with Camino, still talking with these blue chip protocols. And the strategy was still there. You still had the multi-coin doubling down. You still had Alameda or after FTX, obviously, but you still had the major market makers saying, "Here's why Sol's a thesis." And I think like that kind of inspires me. I very like totally is a role model to me in that the like Solana is successful because you have pretty much now all of like meme coin trading volume on Solana. You have all the biggest builders choosing Sol as kind of the platform to build on top of, and that's kind of what led to mind share for Solana. So we understood that principle 2 years ago because we were early move builders. We knew kind of what the ecosystem was like, and we wanted like an opportunity for the community first, the ecosystem first chain that brings the move language. And yeah, it's been a journey since then. I think when we first started off, we had 100 nodes before our first VCS, and we were going to give up so many times. But obviously, that's like a corny story that I can get into. But I think like since then we've evolved a lot. There's a lot of like criticism that comes with that. Like people will still look to me and they're like, "Oh, he's young. He's just gonna scam." Like even like the move mansion thing. Like people thought I genuinely bought a mansion because like I launched a token. I'm like, dude, like it's physically impossible for me to move my paperwork that much, and I'm like literally in my Williamsburg apartment that's not a mansion at all.
I saw something around like yeah, there's like rats in the apartment kind of thing.
Yeah, there's a rat, and it's a rat trap on the ground right
Rushi,
now.
do you think being a young founder is there's this like new wave of founders, I'd say like you and like Dino and other guys, like would you say being a young founder has been an advantage or disadvantage?
Yeah, so I think in terms of being a young founder, there's few benefits, right? Like you touched on like a role on the say energy. That's only possible because like I, I don't have wife and kids. I don't have like a mortgage to worry about. It's like there's a lot of benefits in that, like physical energy and mental energy. I can handle a lot more than if I was like 20 years older. But I do think there's obviously a lot of downsides. Like obviously on CT, people tend to like get jealous. I'd say it's like, oh, this like kid made money, like he's gonna be a scammer and like grift the entire thing, right? Which like better for like we've seen stories of that happening, so I kind of get where they come from. But there's a generally a lack of credibility. That's it's uphill battle that comes with being a young founder, and I think like over time, like that stuff waves around as you prove yourself and kind of get more validation from your peers. But that's what we struggled off when we started off, right? Everyone thought like, oh, these are just two idiot kids, like especially like, in the bear markets. Um, but I think like, as success comes and as you prove yourself, there's still going to be haters. Obviously, there's still going to be people that think like you're in it for the wrong motives, so you're in it for the wrong intentions. But ultimately,
Mhm.
like that's like every young founder. Like Zuck got this when he made Facebook. I'm sure Vitalik got it when he was starting Ethereum. But um, I do think young founders are net good for the industry.
Rushi, can you take me into some of the other like backdoor dealings of these tokens that I think just like people I'm overly curious about them. I know Santi was advising you a lot on this stuff, so like Santi it probably comes to second nature to you. But I mean, here's one thing like the exchanges. Like I saw you guys listed on you guys got a lot of really good listings like BitHum and Upbit and Binance and BitGet and OKX like Bybit, Huobi, all that. I mean, you guys are listed on all the exchanges. Like, what actually goes into those?
Yeah, I mean, the specifics are probably difficult to put on
Mhm.
paper, but generally it's like you're trying to align different markets. So there's Coinbase, which is more for like the US markets. There's the Asia exchanges that have more Asian volume. Obviously, you have Korea. I think the most amount of volume that's happening and moving right now is Upbit. Um, generally, that we see that, especially after launch. Um, Again, like you can't really go into specifics here because a lot of this taboo, which is an unfortunate truth. Like I think like New York Stock Exchange and Nasdaq kind of have more clear regulatory guidelines and clear guidelines for how to approach that. Well, the exchange game is more of a dance. It's about who you know and kind of like the narrative. I'll focus more on like um, how to approach it. I think like first thing you have to realize that it's exchange business is a business. The number one kind of guiding light for these exchanges is net new users to the platform. So something like Polymarket, I don't know when the token plan is there, but that would inevitably bring a lot more users to exchange platforms because Polymarket is a breakout crypto app. People, any exchange that would list Polymarket would probably attract users that have never touched crypto before. Um, and then if you look at like the 50th EVML2, you're probably not attracting that much net new users, which I actually think is leading to kind of decrease in infrastructure listings. It's much more difficult to do that. But I think again, the number one goal for these exchanges is more users, more volume. So when you're kind of designing a company and if your goal is to launch a token, the number one question you should be asking yourself is how do I bring more volume to exchanges and what's my
Mhm.
narrative there?
Mm.
And I think for us it was like we got again lucky, right? Timing, like move was picking up after since we were at all time highs. So we now is like 4.5 cents.
Mhm.
So like this move narrative was especially hot, right? And then kind of like the proxy is on comparisons, right? So what even traders do is like, okay, if this token is trading at X amount of valuation and this token is trading at X amount of valuation, this is what this upcoming token should do.
Right.
And again, like I don't think I agree with the principles always, and I wish there was a better kind of free market, but that's how it works, especially in a lot of these liquid fund trading groups. So the I think from movement was like, oh, Swede's trading this, Apple's trading this. Here's this shiny new coin that could potentially trade like this and brings
Yeah.
X amount of users. And I think it actually worked out, and people started doing that. Whereas like other projects don't really have the comparison, so it's more difficult for them to get on these platforms. So yeah, I think it comes to a lot on like who you know and luck, as well as your general strategy.
I'd like to maybe just double click a little bit on the exchanges and like when you talk to them, like is it they obviously carry a lot of weight, I think, but there's also market makers. How do you from maybe general advice, but like how do you in that position like um negotiate with them or get fair terms? And by the way, like you could also argue that in traditional markets, like lead underwriters, the JP Morgan, Goldman's, whoever's doing your IPO,
Yeah.
like you go back and they're like Facebook as an example was
Yeah.
terribly mispriced.
Yeah.
And these people do it for a living and they'll tell Facebook, hey, the range is like 18 to $20. And they'll go out to the market, they'll like, talk to big institutions who's going to anchor the IPO. And then all of a sudden the stock pops from 18 to like 60. And I'm sure someone at Facebook calls JP Morgan or Goldman and says, guys, what the fuck? We just left so much value on the table. But it's like it's like really hard to predict. Even in traditional, more robust markets, you would think have better price discovery, but it's always like a bit of a magic, the black box that goes behind it. Um, what does that process look like from on the crypto side? Like, is there some sort of formula that they apply, the exchanges? Is there some sort of metric or percentage of tokens that they need, or what is it that they look for the most from your standpoint?
You guys are trying to get me in trouble, aren't you?
I'm not trying. No, and by the way, don't feel. I'm not asking for specifics, but I do
Yeah.
think
Yeah.
that I'm just gonna put like different examples. Hyperliquid, like maybe give two like zero interactions with exchanges probably, and then you have Scroll, which gave what feels like a lot of value to the exchange, and then there's everything in the middle. I'm just kind of curious what goes into that.
I think our information is probably, I think it was like 2%, something like that.
Okay.
I think, look, so there's a lot of different ways that the percentages are calculated. First of all, it's on how much volume and kind of your total TAM here, right? So like some of this, if you're like usually a smaller protocol, like your respective FTV is like 200 to 500 million. The smaller exchanges will try to get like cash out of you or something like that is what I've usually heard of. And the bigger exchanges won't really bother. Usually like the larger scale launches that the scale from like 2 to potentially 20 billion FGV. Then there's like this concept of, okay, you want to get exchanges the value in terms of A, obviously trading volume, expected FTVs and stuff like that, but then B, how much can they give to the users per se. There's various negotiation processes that happen through there. So like usually like you'll approach and then it'll go back and forth, and then to get to the final destination and the final agreement, there'll usually be like dozens of conversations. So it's just a negotiation process, like I would say any other platform. I do think there's a lot of different variables because there's like launch pools, there's like direct listings, there's like pre-markets, there's like
Right.
I think we had like this airdrop thing that was technically the classification for it, but it is a tricky battle, I'll say. And there's anyone, I think, okay, I'll take a step back. Anyone that promises you that they're gonna be exchange consultant or they're like, or it can be advisor, run away.
Run
Run.
away.
I can't tell you. Okay,
Yeah.
this is actually a good point. I can't tell you how many times I've been approached by these advisors that will get you listed and advise you. They'll take 5 to 8 bips of your supply, and they'll guide you through the process. They don't know anything. No one
No.
knows anything. It's
They,
it's all a black box. And if they
they,
know
they,
anything,
yeah.
they're probably going to jail.
Yeah. Thank you for saying that. And any investor that claims to be able to do that is also full of shit. So
Yeah.
just
Rushi,
ultimately,
were there any outside folks who were helpful? Like you have your investors, like Santi. It sounds like was actually quite helpful. But
I don't think it was, to be honest.
okay. Well, anyways, were there any outside
Well,
folks that you hired? Any like contractors, consultants who actually were helpful in this whole process?
There's no contractors or consultants that know anything about this process.
Okay,
'Cause
that's what I figured. But
because
yeah,
it changes every month. What worked last month doesn't work today. What works for me doesn't work for the next person because like the market's changed, right? When the market tanks 50%, you're
yeah,
not getting the same deal you got 6 months ago. So like
yeah.
there's like this. So you have like these advisors that do like, oh, exchange go to market and then market making stuff. Is that's like if you talk to any market maker, they hate those groups that do that because they usually squeeze the market makers dry.
Mhm.
So I guess we can go through that process as the next topic because the biggest issue is like, okay, you have exchanges lined up, but how are you going to set up like the market makers and stuff? So you have usually like there's two main groups. I won't name drop, but I think most viewers who are familiar with it know. Um, they will essentially do an auction. So they'll say, okay, we have 50 market makers, and we're going to do an auction for 6 market making spots, and whoever bids the lowest amount will get access to this protocol's tokens market making. The issue that you run into that in the platform and why it's historically underperformed, I would say in most cases, unless it's like a $20 billion protocol, in which it doesn't really matter, um, is that if you squeeze every market maker dry, they have no incentive to actually perform. So what they do is they'll put a contract and say, okay, whoever bids the lowest amount for this contract wins. So then you get a bunch of these like awful market makers that are obviously just trying to make 100 grand per month, basically. Um, and then they actually are not performing any kind of volume. They're radically underperforming. There's no monitoring on them at all. And then on top of these providers and advisors will be like, look, we'll help you navigate exchanges and talk to like the bigger exchanges and figure out negotiations. The issue is that they have no knowledge about anything that goes on, and oftentimes they're frowned upon. So if you're a viewer and you're listening to this and you're getting approached by these people, run away. In terms of like counsel, I would say like there are like investors that provide advice, right? Because Santi's seen many launches. I've come to him for advice actually before launch, and I was like, "Yo, here's the current situation. Here's the current deals we have. What do you think?" But ultimately, Santi doesn't know what's going on. Like he doesn't like. I doubt his launch token recently.
Right.
But even like someone like I think WN has been really helpful for me. She's like I call her my mom. She calls me fat a lot, and then also says really helpful words. But she kind of gets, especially the Asian markets and launch strategies. But even her, she doesn't. She can't ghost speak. Like she doesn't know how the exchanges go, conversations go, because it is a black box. And if anyone was to actually get in the box, that's insider trading.
Yeah.
So again, like run away from any of these providers. But I would say there are good investors that kind of know a thing or two, and there are like investors that will push you launch a token and be predatory, so you can dump in 6 months. But I think like generally like long term investors have seen token launches, have seen what works and what doesn't work,
Mhm.
and I would try to get those in your corner.
Rushi, when you think about a lot of times in this process, people focus on penetrating and being active in certain markets. Like, hey,
Yep.
let's focus on Korea. Let's focus on on Chinese market or some other market. Did that compute into your thinking as types of exchanges that you prioritized versus not?
Yeah, I mean, 100%. I mean, if I pull up the movement chart, I think the biggest volume is still up it today. Um,
Yeah.
like, I mean, we all know the creative markets have the most amount of volume. Like, Upbit, Bithumb are phenomenal exchanges and great people over there.
Mhm.
But it's just different kind of markets there, right? So I think Jan has it
Yeah.
pulled up. Um,
Right
like
there
it's
you go.
just ridiculous how much the volume is there today. I think when we first launched, it was $3 billion on volume for the first
Oh.
24
Mhm.
hours. I think at one point when we launched, we were the number one token on Upbit,
Right.
as well as just like
Rushi, why is that?
it just like right timing. I think the move narrative was good. Um,
Mhm.
But like, why
so
is the move? Why is that narrative? Is that maybe like because Aptos is so hot in somewhere like Korea? Then they're kind of
yeah,
chasing the move narrative. Like, is that kind of how you think about it?
yeah, I think like generally like Move is pretty big in Korea. Like
Yeah.
we had Aptos as a big participant, we had Sui as a big participant, and generally they looked for like the third incumbent there. Um, I think just generally like the infrastructure narrative still makes a lot of sense. And we've also done a lot of work. So, like for example, we co-sponsored KBW. It was us and Sui as the main title sponsors. So, like we have a lot of on the ground troops
Mm.
in Korea that have been kind of working. But like even like 6 7 months ago, I think we were like, oh, Korea is a top priority for us, and then we want to really make sure that we're getting into the retail communities there. So we have a bunch of like Korean groups that do like local PR, local like marketing there, but also like
Mhm.
we dropped a lot of resources to be a title
Mhm.
sponsor for KBW.
Yeah.
How would you for people that might not be, they should go listen to the pod that we recorded. I think it was like almost a year ago or earlier this year. But how would you describe movement in one or two sentences?
Movement is Ethereum scaling solution that leverages the Move Rich machine. I think our thesis is Move and EVM on ETH. We love ETH as asset class. We believe it's a great source of liquidity. We believe in the Move language and Move VM and Move Prover. And I think like the rise of modularity has introduced the ability to mix and match. So when I built the first DEX in Aptos, like I think Aptos is a phenomenal tech stack and phenomenal L1. But the biggest issue that we ran into there was, okay, like how do you get liquidity to this thing? Um,
Hmm.
And with L2s, the whole concept was bringing Ethereum ETH-L1 security and ETH as asset class natively to DeFi apps and DeFi ecosystems. And I think like we took this hybrid approach. We're like, okay, we believe in high performance execution environments. I think if Dino was here, we talk about like Fluent and WASM based expressivity, but we still believe in Ethereum as asset class. And actually, our architectures have evolved a lot since then. Like we rolled out this like fast finale post confirmation layer, which people call a sidechain. I'm like, okay, we can get into that narrative, but ultimately, like what it looks today is like scaling Ethereum through alternative roll frameworks, alternative VMs, and I think that's the direction that's more fruitful. Um, we saw like honestly too many EVML2s where there isn't much product differentiation, and most of these token launches erratic and underperformed. I think that's something that Hyperliquid also taught, right? It's like a unique product, a unique community leads to good performance.
Mhm.
Whilst like you look at most EVML2s today, like community kind of got dicked over, and then just like the product wasn't uniquely different to create a narrative, so there wasn't enough like retail interest in it. Where
Yeah.
something like Move, obviously, it's there's only three main Move blockchains on the market. It's still relatively young. It still feels like Solana in 2021. People are still looking for the next SVM, and I think that's driven a lot of interest in the moving system.
Yeah, there's certainly been like a lot of developments on the move. Like whether you look at Sui or Aptos, like institutional adoption, like stable coins coming onto these networks. The growth has been pretty remarkable over the last like 6, 7 months. From your standpoint, as someone who is like a lead evangelist for Move, like what have been some of the more um like interesting things that you've tracked or consider to be like really turning points in like increasing awareness and interest in Move as a language, but also in Move based chains?
Yeah, so I think every metric in crypto is now gameable. Like wallets, we know gameable. Transactions, we know gameable. Um, TVL used to be cool until the TVL points program started. So now TVL can be bought. Like anyone can get $1 billion in TVL in 3 months. So I think the only left metric that isn't gameable is fundraised ecosystem projects, where private venture capitalists, public venture capitalists are investing and supporting ecosystem projects. Um, and I think like that's been kind of my north star, because ultimately, if you have a crew, a set of let's say 20 projects that have all raised private venture that have 4 years runway, they're going to be there when the token takes 90%. They're going to be there when a major exchange collapses and there's a big DPEG, right? Which again, going back to Solana, which is starting the playbook, right? In 2021, Solana ripped, FTX collapsed. You still had the 20 plus projects that were depths in the bear market that Santi and you guys probably invested in, that were really high conviction in Solana. And then when Solana came back up, those guys like Jupiter's at 9 billion, Jito's at like 3 billion as well. Like these guys have built their own teams, built their own developers, and I think that's how you actually grow ecosystem community. So I think for Mood developer ecosystem, like one thing that we're noticing is like developer counts. Like first year it was 3.5%. 6 months ago it was 7.5% of monthly active developers. Now we're at 9.7% of monthly active developers or Move devs, and next year we'll hit 14.2%. So the Mood developer growth rate has outpaced SVM, mostly because you now have 10 plus billion-dollar chains that have done phenomenal in terms of user acquisition and obviously launching successful products. But B, I would say like people actually get the technology. People get like Rust-based programming is powerful. People get that you can build highly secure and high performant apps to Move. And honestly, people love the language. So we've been noticing that there's more developers coming in from like JavaScript, Web2 backgrounds, and then these teams are getting funded. So for moving ecosystem, particularly, there is more venture-backed teams in the ecosystem than the labs company itself as of today. Obviously that will change over the coming months, but I think that's been a personal priority and accomplishment of mine.
Rushi, who do you think? I think the alt VM narrative makes a lot of sense. It's like, I mean, my one liner for movement when people ask me about it is like, you're letting developers build. Move is a good language. You're letting developers build and move, but basically settle back to
Yep.
Ethereum, where like
Yep.
there's a lot of liquidity and dev tools and all that kind of stuff. But there's all these alt VMs. It's like Eclipse and Movement and Fluent and Maiden and Cardessi and Fuel and I'm sure the Anisha. I don't know if all these fit into the same bucket. Catalyst, like there's all these things. How many winners do you think there will be in this category?
I think Santi said this like a year ago. Like the modular expansion was like this unraveling of different ecosystem projects, different DAs, different sequencers, different execution environments, and then you have consolidation, which is I think we're getting the consolidation era right now. Actually, I think a year ago when the modular expansion happened, and when Santi sent this, it was like you had everyone their mom raising like a new round for like the shared sequencer or like a new DA layer, and there's like 8 DA layers that were funded, and there's like 20 execution environments. And like, yeah, I think that made sense for like the unraveling. And now people are like, oh wait, infrastructure is rather fatigued to a degree. People want apps, people want like public launches, fair launches, people want like actual products. So now we're seeing consolidations. And the consolidation comes down to whoever's best community, because ultimately your community is your user base. And any chain or product that screws over the community fundamentally dies. We've seen that with recent launches. And then B, it's on ecosystem where it doesn't matter if you build a chain. There's 5 billion chains that have been launched. It matters on when you get the next poly market, whether you get the next like gaming app to actually get with the Gunzilla, right? Or the off the grid. So I think now we're entering the consolidation era where there will only be, I think like everything happens in pairs. So you had like Optimism, Arbitrum, you had Soul Avax, you had Aptos and Sui. I think for like this modular incumbent, there'll be another pair. Hopefully we're one of the pairs, but obviously it's too early to say.
Yeah.
I think even for DAs, you have like Celestia and Eigen DA, right? So usually these things happen in pairs. So for the execution environments and for the VMs, that would probably be my bet, where there's probably two novel alt VM execution environments that win. Yeah.
Yeah. I agree with that. Are you competing for Ethereum's existing user base, or like Arbitrum and Optimism's user base, or Move and Sui's Aptos and Sui's user base?
I mean, that's the thing about crypto, right? Everything's competitive with each other into
It's all,
some
yeah.
degree. Like it's
Yeah.
ultimately a mindshare game and attention game. So I can sit here and be like, I'm competitive with Bear Chain, but in reality it means you're best friends, right? So like that's I tend to not look at that lens, because if I'm competing for 15,000 developers, I as like a entrepreneur is not really accomplishing anything. Like my favorite analogy I say is more developers at Facebook today than all of crypto. So like when people tell me like, oh, EVM is one, I'm like, one what?
That's a
And
great line.
B,
Yeah, that's a great line.
and then B, I'm just like, okay, like we're still so early to the point of like it doesn't make sense for me to like try to get 10 developers from like Scroll or 10 developers from like Optimism, right? It's like TVL is a usually predatory metric, in that like if I put a points program up tomorrow, I'll probably get 1 billion TVL in a month. So like I'm not in this game for like TVL for token go up game. It's more about like, okay, how do you get like the next poly market and drive the adoption? Like Polygon POS, no one talks about it today, but it drives so much volume because you have poly market on it. And I would argue the Polygon POS is doing more success for the crypto industry than majority of the EVML2s that have launched, and even
Mhm.
like Alta ones. So like the narrative often doesn't correlate with kind of sentiment, but that's a different story. But yeah, I think like the focus and number one North Star for the winning apps or the winning systems is successful apps. Like Solana is winning because they have Pump, because they have like you have all Deepin products basically choosing to build on Solana. Hopefully Movement will be kind of the incumbent one for the next few months.
Scale is the blockchain that is simply built different. Let's face it, other L1 networks have costly transaction fees that increase as the network gets busier. Scale has solved this problem with a gas-free, scalable infrastructure where users never pay gas fees. Scale was awarded the most active gaming chain in 2023 by CoinGecko and hosts 5 of the top 25 games on DApp Radar. You should definitely check out Scale. I was using it the other day. It really is incredible to use. That's Scale, spelled with a K. Hit the link in the show notes or head on over to skale.space/ecosystem to get started today. Hey everyone, Jason here. I wanted to take a second to break down why Magic Eden is getting into token trading. Their team is extremely concerned that crypto is still consolidated in the hands of a few centralized exchanges who act as gatekeepers, ultimately recreating the TradFi space. They believe that crypto is still missing an on-chain Binance, and their aim is to move trading completely on-chain, fully decentralized. They've done $6 billion in NFT volume in the last 3 years and have had more than 1.4 million users visit their platform in the past year, making them the #1 NFT platform in the market today. They are the ones that can do it. Stay up to date with Magic Eden's journey by giving them a follow on X @Magic Eden. Are you a project founder struggling to pay your team in stables or even just giving them token grants? I've seen this issue firsthand throughout the space. Traditional payroll or EOR providers don't support crypto. Even if you wanted to do it yourself, it's really complicated to figure out all the tax withholdings, report to the IRS or any government, and manage local filings. Toku simplifies every part of global token compensation. Everything from paying full-time employees in stablecoins, issuing token grants to your team and investors, all in 100 countries on one platform. You can plug Toku into your existing payroll setup or even choose a fully managed service. No guesswork, no missed deadlines, no complexity. Reach out to their incredible team at toku.com or by hitting the link in the description of today's episode. Earlier in today's episode, I mentioned Ledger's latest products, the Stacks and Flex, and I wanted to take a few seconds to tell you more about them. These wallets feature the world's first secure touchscreens, which don't just simplify your digital transactions, but also keep them extremely safe. These wallets are virtually impenetrable to online attacks because they store your private key in a secure offline chip. You can manage more than 5,500 tokens and install up to 100 apps. Choose the most trusted name in hardware wallets and take control of your digital security today at ledger.com or hit the link in the description of today's episode to check out their latest wallets.
I think I definitely agree with that idea. A lot of what I've been thinking about lately is like there's a great A16Z blog post, I think a year, like sorry, a month ago or two, and they're trying to like assess how many like real users are in crypto, and I think they come to a metric of like anywhere from like 30 to 60 million or 30 to 40 million active users, and it's like a great post. We can link it. And I looked at that and I said, gosh, like it's not a lot. And of course, like there's like I think it's somewhere between 17% if you look at like all active users, or like what crypto.com discloses as like 200 million users. The reality is it's vastly less than that. And to your point around polymarket, like I just think as an industry, like we have kind of 4 years to really get our shit together and really drive like non-speculative use cases, and maybe that's deepen, likely deepen. And like yeah, stablecoins are great, but like for what? Like the non-speculative use cases of a stablecoin payments. Um and and of course it has to do with a very good developer experience. That was the impetus having you and Dino on, because I do think it starts there, right? Like, there's more developers that likely are going to be onboarded through and learn about Move. It likely is easier than Solidity. Um, and maybe that a lot of that started with like Libra and that consortium and getting people interested. And like, I would think that I'd be curious to understand from your standpoint if you are seeing what type of developers are coming to build on movement. Is that projects that exist in other chains that appreciate the benefits of movement, or is it also like net new that are coming from web 2 that are saying, hey gosh, like this is actually a language that I understand, that is really secure, and that I can get on board with like deploying on chain without feeling that I'm going to get hacked. And like, with Solidity, it's actually, a problem, right? And with Move, it's really not. And so, yeah, I'm kind of curious, like, how two parts of the question. One is, when you talk about ecosystem, how much of it is like, what are you seeing on the developer side, and what are you seeing then on like applications and then users, to drive like the non-speculative adoption?
So I'll start with the application side. I think like the main the main era that I want to enter now, and I think is where we're entering, is like the next Pinterest variation or the next Snapchat variation built with crypto. And we've been saying this for a while. Like even like Diesel was talking about this back in the day, before all that stuff happened. But I think we're at the point where infrastructure is performant enough. You're not really bottlenecked by customizations. You want your own app chain, go to Caldera, Conduit, launch your own chain. If you want like a different data layer, you can do that. If you want like different L1s, you can do that. You have all the infrastructure in the world. Uh, and now it's a question of, okay, what does the utilization mean? And I think where we get to is like, when we're building Pinterest, when we're building Uber, right now there's no incentivizations for users. There's no baked in incentivization models. What crypto enables you to do is essentially when you build content or when you create something in the world, right now you can own the asset, and it's always been like the read, write, own, right? Own the asset and get rewarded for that. And I think like there's early ideas for this. Like you had like the music. I forgot what it's called, but there's like this music to earn back in the day, and then you had teleport, which is like this Uber to earn. And I think those were too early because America wasn't ready for it. And I mean, I'm American, so I'm going to say a lot of these things, but I think it's going to start from America, where we have Snapchat, Pinterest, these things being built on crypto rails, starting in Silicon Valley probably, or New York City, one of these hubs, where they look at crypto as a way to monetize their likeliness and then distribute rewards on a distributed ledger. And I think this is how it's always started. Like you had like Web two when you had like original hardware being built overseas, but ultimately the software boom happened in Silicon Valley and happened in the States. And now the regulations in town. Now we have new regime with Trump, and now that we'll have a lot more forward thinking for institutions and platform providers. Like Stripe just acquired Bridge, right? Now you have those APIs a lot more accessible. So now that developer experience, from an infrastructure level, is 10x better. But now from like a sentiment point of view, it is now cool. Like you go to Berkeley. I was talking to someone yesterday, like like Berkeley Blockchain Club. The Berkeley Blockchain Club is like doubled in like student population, is now one of the top clubs at Berkeley. And most of the startups now coming from like the Berkeley accelerators are thinking, hey, how do I get crypto involved here? Obviously, that means that obviously Bitcoin being at an all-time high helps, but it's also like, look, I can potentially launch a token and get obviously liquidity much faster. But in terms of like go to market, I can incentivize my users much quicker than going
Mhm.
public on 10 to 15 years. So I think this ties into different models that Santi, you're working on private equity side, where you have um, kind of Web2 companies right now that don't really per se have ability to IPO. Venture in Web2 is underperforming anything. Web2 and venture, that Web2 venture is getting their ass kicked. So now you have like these really promising Web2 companies that now see crypto as ability to distribute value, but B, ability to incentivize their users. So I think there's going to be this unlocking point where you have existing Web2 companies that will go through private equity or go through crypto consultants to launch more tokens. Like I do think there will be Web2 companies that have been blocked by IPOs that now will turn to tokens. Like we can meme about Enron, but maybe that's
Yeah.
like the direction, right? And then you have new builders that previously didn't looked at crypto as a scam, basically, but now you have Stripe APIs for Bridge stablecoins, which now
Mhm.
enables you to do
Mhm.
payments. That stuff didn't exist 4 years ago when people were talking about music to earn and Uber to earn. Um, so I'm looking for the next Pinterest on crypto.
Yeah. I think university clubs have always been really really important and have kind of flourished. Um, and Yeah, I mean, there's a lot of it's not just like launching a token. I think like there could be a lot of variations where companies use tokens. I mean, I guess you use a token to acquire users, or you use an NFT. By the way, it could be an NFT. The simple hack is like most B2C companies do not understand or have a direct relationship with their customer. Like, put a QR code in the store. And when someone sees a QR code, they're gonna scan. They get something for free. It's common psychology, like business sense. And as soon as they get airdropped something, they're gonna want to onboard it to Phantom because they want to see what they're getting. It's like the unboxing thing, and that's an NFT. Once they do that, you can stitch digital with physical. You can retarget that customer. You own that customer relationship directly. What does that do to your P&L? It lowers your customer acquisition cost. Like, I mean, that alone, that alone takes us 10x to where we are now in terms of users, in terms of activity, non-speculative activity. The LTV of that user is going to stick around on chain no matter if Bitcoin's at 100 or back to 30. You know what I mean? Like the problem we have as an industry is that 20 to 30 million users that A16Z is pointing to is not very sticky, because if Bitcoin's back at 30, yeah, that
Yeah.
number is going to go
Well,
down
well,
to
also
10
like
or to 5.
those users, we kind of know what those users are, right? Like,
Yeah.
yes, like you use the 50th dex on this shiny L2 and get their token. Like,
Yeah.
yes, you can call that user. It might be some like farmer in like Indonesia doing it, but it's not really like like a power performing user that like the industry
Yeah.
like that creates sentiment, right? So I
Yeah.
think like the real users that we're targeting is like the application users. I don't want to talk about chain users. I refuse to talk about like active wallets. I think that's the stupidest thing
No,
ever
that's
because
nonsense. Yeah.
you can go to a bot farm and like pay someone like 100 grand a month and
Yeah.
do that and like pretty quickly. Um, I
Yeah,
do
it's
like
the
this.
you
uh,
remember that Libra chart?
Yeah,
They had like every
yeah.
company from PayPal to Uber
Yeah, the
to
big consortium chart. Yeah,
that's gonna
Like,
come
that was
back.
supposed to be our
Like
moment. Yeah.
yeah.
Like that's what I want, and I think it will come back. Like because all of those companies are now reactivating their interest in doing this. I don't think I'm not of the mind that like these businesses are no longer skeptical about the industry. They have internal working groups and have had for a while that now are like, okay, the design space is opening up, and maybe that takes another year once Trump gets elected. Maybe there's one pioneer out there that does it. Stripe doing this bridge acquisition is like going to go down as an Instagram kind of moment for the space. um, PayPal launching their own stablecoin is huge, right? Then you see a path towards every company launching their own stablecoin to circumvent the 2 to 3% merchant processing fees. Um, but yeah, like Polymarket's very like volatile in the sense of election drove a big part of the adoption. Like, but there's just so many from your standpoint. Like, you have like an ecosystem, you have a treasury now that is not insignificant. How do you put that to work? Like, do you have internal priorities that you say, hey, listen, we're gonna grant, and we want to really own this category. Like we want to own payments, we want to own social, we want to own NFTs for business. Like, is there something internally that you guys really want to own?
I've been at Treasury for 3 days, so, I'm still putting that together, but I think, like, okay, I'm gonna start on the original point you made on the DM chart because I have it pulled up in front of me. Like, Lyft, Shopify, like, I'm looking at the list of these charts, and I think, like, the 2 main market signals I would look for is when Lyft or Uber integrates some kind of crypto integration, and when Pinterest or a Pinterest variant emerges to market in crypto. I think those will be the 2 signs that um, the adoption is here and coming. Like I think like Stripe doing is the big moment that you touched on. And then you have like, going back to the original chart, like you have like Spotify and some of the folks that once they do it, like I think Shopify did this with Solana. But once you see like the Shopify, Lyft, Uber, one of those doing it, the pinballs all fall because as soon as one of them does it, and as soon as them like even like merchant costs, right? So like the ability for like Uber drivers to get paid USDC, so they're not getting hit with like
Yeah.
transaction fees. Uber and Lyft would save like 3 to 5% and not giving it to Visa and MasterCard and instantly outcompete other rideshare platforms. And I'm sure they're talking about internally. I'm sure like there's smarter people than me going through this, but it's instantly a 10x accomplishment just by accepting stablecoins. And I think that will be the unlock that hopefully happens in the next 2 years. And then I think like going back to our strategy, like I think like one thing that we're like I'm really bullish on is like this younger audience of developers. Because when we look at like Web2 and look at Zuckerberg, we look at Pinterest, all these other ideas. I keep bringing up Pinterest because that's like my dream crypto app. Um, those were all like younger founders. The founders are like 21 to like 25. They don't have the best brand name. They don't have $1 million to pose, but they have this hunger and fire. And I think like that's something that I'm really passionate about personally. Is like if I can go to, I know like the whole concept of big infrastructure companies going in like blockchain clubs have always been bad. It's always been like, okay, this big Ethereum Foundation, somebody's going to sponsor a hackathon at Berkeley, get a few grants, and call it a day. But the issue is that no one really
Mhm.
cares about that. People like these builders and these students are going to do it, get 10 grand, and then go get a job at McKinsey. That's what I'm
Yeah.
trying to avoid. And I think like my next phase is like and what me and Cooper did really well is that we were able to start moving because we had like originally like 2 advisors, investors, not advisors, but investors that were like, "Hey, you're really smart, you're really talented, build this thing." And actually, is the Ava Labs people, Luigi and team were like, "Look, you're really smart, you're building a move. We want to move subnet." And what they did is like they essentially provided like end-to-end support, and that means like responding messages, explain to me what crypto was, like, basically how running a company was. And I hate the whole process of like formal accelerators and hackathons because it doesn't feel genuine. I think what these builders are missing is that lack of connection to like someone who's made it in like who's done the kind of 0 to 1, and then B kind of understands how to navigate all the difficulties of
Mhm.
starting a company as a written off founder. So I think like I don't know how I'm going to do it. I actually am still trying to process this, but like, we do have resources, right? And now
I
it's like
do.
okay, we have
It,
we have a lot of ideas. We want like that Lyft integration. We want that Spotify
Mhm.
integration. We want that uh, the kind of consumer app that we built that we're really interested in. How do we incubate and accelerate those? And I think the age group that no one's touching is like the college dropout mentality. Um, and I think
Yeah.
that's going to be my focus for the next 6 months.
Well, certainly they look to you as inspiration, and it's very aligned with your story. Look, I'm not here to give advice, but in my conversations with foundations and just looking from the outside in, it is if I were in their seat, I would be way more aggressive because if you have that amount of treasury, the community grants and the ROI of that is very unclear to me. Um, I would be very focused in being very targeted in saying, going to a big company and saying, "Hey, listen, guys, here's the playbook." Like literally, drop them be like, "This is how you do it. Like, let us do a pilot for you. We'll put it all on the table. Dev resources." The chain that's done it probably best, in my opinion, is Avalanche for finance. They just have a ton of people working from like City. They somehow like recruited everyone from there, and they've gotten BlackRock and KKR and Accenture and all these like they've owned kind of the fintech vertical. And with Avalanche 9000, I mean, I didn't fully appreciate, but I've had so many conversations with him now. I'm
Yep.
actually seeing Luigi again today, and it's like, and Morgan, it's pretty impressive what they've done. Not to say that you couldn't go after that, but like, I think if you really wanted a Pinterest, go to Pinterest. The stock is down, like there's all these public companies, like they're all struggling the same stuff, and it's you simply just go to them, knock on their door, say, guys, this is move the language. This is movement. Um, there is a user base that exists in crypto that is young, potentially high LTV that you haven't been able to track and you could acquire on chain. And then there's also a user base that you already have that is going to really appreciate the crypto stuff, the NFT stuff that is fun, engaging. And the combination of all that takes your business from one today to one and a half or two.
Yep. And I've talked to Luigi a lot about this, and I think that the biggest issue that they run into is like these things move too slow. Like you want to talk to JP
Sure.
Morgan, it takes four. Like Morgan's a phenomenal, like she's been crushing over there, but she's mentioned like it takes forever for these things to move, which is like again, like there's probably better. Like I think A Labs and that team is doing a phenomenal job, but I don't think I'm gonna be good at that. Like I want to like test, burn, and try something in 6 months because ultimately, like the way I live,
Yeah,
I've always run movement is through the 90-day principle. You have 90 days to prove yourself to the market
sure.
and stay relevant. So like every initiative that I obviously have longer term initiatives with the foundation, and that's going to be something
Uh,
we talk about. But like I'd rather be on like you have 90 days. I think this is actually with private equities. I coming back to it, it's very interesting. Like if you can acquire or like semi-acquire a struggling Web2 company that has a lot of potential, that has a team that doesn't really have ability to has been around for 10 years, hasn't been ability to get liquidity, you can say, like, look, it's very, very easy for you to add crypto to ecosystem and become a very prominent crypto app.
uh,
Like we like talk about
but
like like mortgages, right? The whole like house process and buying a house, buying a move mansion is very, very difficult to do. I don't even know how to buy a move mansion.
yeah,
Um,
no.
if some way we could settle those with crypto and go to like the dying realtors and the dying settlement groups that for these house manufacturers and these contractors, you're solving a multi-billion-dollar market in 3 months.
I mean, yeah. Thank you for laying out the thesis.
So LP should
The
invest
yeah,
in
no,
the
no, no.
venture cap.
Listen, no, no. Well, but the business I'm looking at has 22 million subscribers.
Yep.
The
And
the
that's
the thing
those 22
that
million are more real than whatever
no,
Andreessen's
no,
40
no.
million
What
was.
that higher LTV because they're going to be sticky. They don't care if Bitcoin's at 100, 200, or 30. You're servicing a core product. You're settling on chain. It's invisible. You want to activate them with other things? Great. You want to service them NFTs? Yeah, lower your customer acquisition cost. Loyalty programs, retention. You upsell them stuff. I mean, honestly, I mean, again, but I do think that I'm glad to hear you say it because I do think we have 4 years to figure this shit out. If that 20 to 30 million number doesn't grow by like 2 to 5x, we're gonna who knows what the next administration is gonna look like, who knows a number of things. But the best we can do, going back to like Uber was so successful in spite of the amount of fierce regulatory backlash and lobbying efforts against it. in everywhere in the world, from Colombia to the US to Europe, because it was the consumers love that product. If you're a politician and you shut it down in Paris, you heard from every constituent was like, "What the fuck? Bring it back." And you had to prioritize the taxi lobby or your constituent base, and ultimately, because it was a killer product, Uber prevailed. And we have 4 years to get to that spot. And so I would encourage you to think about, yeah, I think the position that you're in is good because you're tapping into something that the market has already seen. That Libra chart, I think, is so powerful.
Yep.
When I first heard the pitch for Aptos, which I was an investor in, I am an investor in, it was like it was that. It's like bring that back. And the benefit of now is to I don't think it's gonna to your point around like Avalanche saying that it has taken a lot of time. There has been a lot of internal resistance of businesses, just innovators' dilemma. They don't want to change processes because they are making money and they don't necessarily care. But I think there's like a lot of other businesses that are kind of broken or really hit a roadblock. And because you have a president that is buying stuff on chain and has an NFT collection,
Yep.
I would
Well,
bet that they would move marginally faster.
I think like going back to the Uber example, like if you went to taxi companies and told them to build Uber, they would never do it or adopt ride sharing, they never do it. But because Uber came to market and was incumbent, small, scrappy startup that scaled, taxi drivers had to succumb, and now like taxis, New York taxis are in the Uber app, right? So similarly, like I don't think it makes. I actually disagree with the approach of like going to JP Morgan and getting them to like as
Oh,
getting to succumb because I think that'll take years.
yes.
Versus you get a competitor, like, and that's what I'm focused on. Get a competitor of 10 college kids that are going to build the next, like, scrappy banking startup or the next real estate startup. Give them crypto VCs, put crypto backing, launch a token, and have them compete with their Web2 incumbents. And I think we've seen this before. Like we've seen like Web3 Spotify and Web3 real estate, and like all these things have come to market. But I think like that was the wrong time. You couldn't really do that 5 years ago, and I think that's when
Oh,
Audius was that's what the name. Audius was doing this
yeah.
like 5 years ago. It didn't make sense to that. Like crypto is like not in the right space. If you try to pull off Audius today, you actually Anil from Delphi and I've been jamming on this, and we want to do something together on this. But like for example, like
Mhm,
house music creators, like there's really shitty marketplace for them right now. And right now they're getting
mhm,
kind of screwed by big labels. So like my job and like kind of what I'm interested in is empowering that group of like 10 college kids to kind of take
mhm.
on those incumbents, build like the next like kind of genesis. And then that creates pressure because if you're a big company and you see like this smaller crypto company is getting TAM and stealing your market share, you're forced to start taking more seriously. Whereas like if you go to the big organizations and say, hey JP Morgan, can you think about crypto? They'll be like 8 years
Yeah.
down the line, put on the roadmap.
Even though they have like a 200-person team.
Yeah. But I think you
Yeah,
need
I
both.
like
I
it.
think Avalanche needs to do that to build
Yeah,
awareness. But I
totally,
think like
totally.
where we exist is like we're never gonna be Avalanche. I love them, but this is kind of where we can accelerate.
Yeah. No, absolutely, man. Well, we're rooting for you, and if we could help, we're here.
Of course.
Um, I mean, we talked about a lot of stuff. Anything else that you want to talk about generally, or um, both you, Rushi, Yano?
Rushi, are there any like things that you saw people bring up on movement on Twitter that you want to dispel?
Um, well, I
There's
think
no mansion.
there's no mention.
There's a rat infested apartment in
The
Jersey.
investment apartment. Yeah, I think like I mean our architecture is uniquely different. Like yes, doesn't mean like a token before a chain nonsense, but I think like people have like kind of delved into kind of what we do. Like we have this fast finale layer that requires deposits, and like it's not such like maintenance coming in the next like 2 or 3 weeks, I'd say, where you can have all the apps ecosystem live. So it is easy to be like, okay, launch token before mainnet, call it a day. But you'll see in the next like few weeks that there will
Yeah.
be a vibrant ecosystem, all those L2s that I think like the Ethereum scaling roadmap for the last like few years has been like definition based, and like nomenclatures and mean integral have been back and forth, and now he's on Fluent, so that's gonna be fun for me. But we've been back and forth on like roll-up definitions, and then my counter to that is like, dude, I don't care. Like all these L2s have spent the last 5 years have spent $1 billion in venture capital and defining what roll-ups mean, and I can't name one app on any of these roll-ups, and I don't think like anyone will ever use any of these. I think Base, cool, like they have Coinbase and they'll continue to crush, but beyond that, like I'm not really excited about anything that's being built on any of these L2s. I don't know if you guys
Yeah.
are. Whereas like Solana, these alt L1s, even Barachain, right? Like Barachain still EVM on Cosmos, so you still see some super cool apps being built there. So like again, like I'm not in the business of roll-up definitions. You want to come after me and call my roll fake, call sidechain, I don't really care. I think like what gets me excited is like the next 6 months, 8 months when we radically accelerate and have crypto apps that people use. And I'd rather be a sidechain with the top apps in crypto than be a L2 according to the Ethereum gods with no users.
100%. Yeah. Cool, man. Well, congrats on everything. I know it's early. I feel like these events are just like such a legal headache and dealing with the exchanges. And now you can get back to actually building some cool shit and talking to some,
Job just get started.
good
Job just get
developers.
started.
So congrats to
When's
Rushi. Yeah.
when are we gonna have a move conference day or a move
We're doing
side
Eat
event?
Denver. Eat Denver, we're having a pretty big.
Yeah.
I mean, we did one with Aptos actually in Thailand. We had like a
In the
meat
past.
day. That was pretty good. But we're probably
I
gonna go
remember
bigger.
being at the one at ECC in Brussels.
Yeah.
That was
Yeah. So we're gonna do that one at Eat Denver. I think
Rushi,
it's
you
gonna
guys should do one at Permissionless in Brooklyn in June.
there we go.
Dude.
He had to shell
No,
permission.
dude, I'm down.
It's coming to
I'm down.
Brooklyn. We don't want to go to Denver. It's coming to Brooklyn.
Dude, we should do like a rate. Okay. Yeah, I think like
I'm just kidding. I love
we
Eat Denver, but
we want to go pretty hard at permissionless as well.
let's go. Rushi, how does it feel to be like 23 and have a boatload of money to your name?
22, but it's not liquid, obviously, and like it could go down 90%. But also, it's like again, one of the things about being young is I don't really need it. Like I'm fine with my Williamsburg shitty apartment. I think more so it's like I'm not really happy until we're the next Solana and we actually have tangible outcomes. Like I want this Libra chart to come alive, and that's my goal.
Let's do it.
Yeah.
The DM
Honestly,
chart to
meme
come
it into
alive.
existence.
Yeah.
Meme it into existence. That's my focus too. Like we have 4 years to figure shit out and grow that 20 to 30 million users to over 100. And if we don't do that, none of this shit will matter.
Yeah. I mean, also like we talk about like even like wealth, right? Like Solana is Solana because like they actually have people using their chain, right? So I think from my side, like jobs just getting started. Tokens going to go down 50% next week, go up 50% next week. I don't really know. But I think ultimately, like if we had builders like ecosystem, I think one thing I'm proud of is like the community was stoked. We made like I think community members made like 10 to 15 grand each, and people were generally like very very happy. I think that builds loyalty, right? I think Bernisky tweeted about this the other day, where it's like it was a quote tweeting one of our community members, and it was like, dude, like that stuff builds loyalty because historically L2s have kind of been like, oh, I'm gonna launch a token, trade down 90%, dump on community, and then the chain dies, and people wonder why no one uses it. Well, now it's like we have millions of people that made a shit ton of money off of us, and hopefully kept or whatever they did with it, and we'll be loyal to moving system even when the token goes down 90%.
Yeah, cool. Rishi, congrats, man.
Thanks, Yana. Thanks, Andy.
Congrats, sir.
Cool.
Been a treat following your progress, man. Keep evangelizing, and let's make that Libra chart great.
Appreciate it.
Meme it, will it into existence, and I'm counting on you to do that.
Thanks, man. You too.
Hey everyone, thanks for watching today's episode. Just wanted to quickly thank today's title sponsor, Skale. Skale really is one of the best chain experiences out there today, and I've used so many different chains. There's a reason they are gaining so much adoption in both gaming and AI use cases. Hit the link in the show notes to explore the Skale ecosystem.